Okay, we are hitting the live stream button and here we are. Okay, welcome everyone to Smart Investing with Clem Chambers and Zach Meir. So we have got Clem now and we are waiting for Zach. How are you, Clem?
I'm very good, thank you. I mean, the market seems to be waking up as far as gold's concerned, and it seems to be waking up in general. It's had a bit of a swing. It's now to the upside of its channel, which is when you get enthusiastic and you buy, and then it falls back down to the bottom of the channel and you get depressed and you sell. So you buy high and sell low, which is what most people do, and then they wonder why they don't make any money. So now's the time to be sad and start to sell. And then when it falls, buy back again, be happy. That's the way to do it. Very difficult when it's in a tight range like this. Very, very difficult.
Yeah.
Personally, I just like to try to avoid the crashes and then buy the crash. And that's really, really difficult. But when you've got a crash, it's easy. But getting out at near the top of a crash is very difficult. And I've managed to pull it off. Well, all the times it's crashed, and 2 or 3 times when it hasn't. Well, here we go. Here's the man himself, Zach.
Can you hear me?
Yes, we can.
I changed computers, so this is incredible, really. The headphones work.
Okay, fantastic. Maybe
I'm so excited.
Listen, maybe unmute yourself when when you're not speaking, because there is a bit of noise and just
but that creates atmosphere.
All right. Okay.
No, I can't hear the noise.
Well, no, I think it just, as long as it's working, I'm just so happy, because every week to date has been a nightmare. So
it's perfect. It's perfect. So let's just break down a bit, Clem, what you said, because you predicted high inflation, which is actually here we are, right? And you said the market is looking good. I just want to analyze that a little bit more, because where we are basically with the stock market. Let's start with that.
But I think it's actually quite weird, because I don't think the market is actually responding to this obvious inflation in a way which is you'd expect. And I think that's because, generally speaking, the market is now so highly manipulated, particularly by the American Federal Reserve, that it doesn't have this old-fashioned natural reflexes. And it's very much buffered from good news and bad news. And now they've got the taper coming, so they say, which of course is still more money printing, just at a slower rate. That's going to be very interesting. And I was reading another thing I found fascinating, which is all this net zero CO2 stuff, which Zach will now be falling off his chair and frothing out the mouth in anger. But it's going to cost $150 trillion over the next 30 years, which is $5 trillion a year, which is the American tax take all in one piece. And the only way they're going to pull it off is to print money. And the only way that what happens when you print money is you get inflation. So they're reckoning, Bank of America apparently, are reckoning 2 to 3% inflation in addition to any other inflation we might have for the next 30 years. So, that is currently rebasing levels of inflation. But whether they actually do take the poison pill and kill everybody with ecological insanity or not is another matter. But we've got this baked-in inflation of about 50 to 100%. And the market really isn't reacting to that as much as it should be. But it seems that it's starting. So there's this huge lag, which, markets are meant to react instantly. And I've been going, oh, inflation's coming, it's obvious. Even the poor can see that. And then dead silence. And a year later, here it is. And everyone's going, oh, inflation, oh. Rather than, oh my God, I need to buy gold miners. Oh, I need to buy gold and precious metals. Oh my God. They're not doing that. It's sort of like, oh, inflation. Ooh. And I find that bizarre. But we are in bizarre times because, these days, a lot of markets are centrally controlled, as if they're back in the old days of government nationalising everything. And so they've nationalised markets in a stealth way, and therefore they're moving very, very slowly. And it's a lot of distortion, and it's very, very hard to navigate when basically there's a handful of central bankers who are calling the tune to everything. That's me end statement for a change. Can you hear me, Steffi? Are you there?
Yeah, we are. We just lost you for a second.
Could I chip in now?
Yeah, go on.
Oh no.
Yeah, well, so I think the reason the market's not reacting was they don't believe there's going to be any tapering. They don't believe there's going to be interest rates rising.
Just when I said the really good tip.
And I think you're
well, they should definitely be buying gold, shouldn't they?
Well, yeah, no, exactly. No, I think that's right. I think they're probably, rather than gold, they're buying cryptos. I think I would prefer cryptos. And what can possibly go wrong with that? That's been the best inflation hedge over the last few years. So keep buying the Bitcoin and everything else. And I think actually a lot of the reason the stock market is amazingly sort of flat is because I think a lot of liquidity has gone into the crypto space, especially from the young people, the Robin Hood Generation Z type people. And that's going to maybe be more clear as we go on. You know, I mean, another 5 years' time, you know, the swing between the generations will become more pronounced. And
Doug, can I ask you a question here, and maybe to Clem as well? Obviously, there are ways to get in crypto also via stock, because we have got Coinbase, we have got some other stock in the US, they are exposed to crypto. So why people are choosing perhaps getting exposure directly to Bitcoin and Ethereum that have been the major crypto assets, rather than perhaps maybe buy into a crypto stock?
I think they did that. They did a bit that. They did that with Argo blockchain, and that would have gone reasonably well. I think from below 10p. I think it was last Christmas. I can't remember exactly what it was, but to over £3 at one point, or something like that. And I think that is a good play. And I think probably we'll have sort of the second wave of crypto stocks and crypto exposed stocks and crypto apps, trading apps and banking apps related to crypto that'll come through too now. And I think that's you know, the main thing there. I think the Chinese banning it is the best thing that could happen to crypto, because the whole point of crypto was that it would be out of control of the totalitarian states and horrible central taxing governments and everything else. So that's a big win, and it shows the purpose of crypto, and that's what it was. It's a shame, I think, that gold hasn't had its day yet. But I think, you know, probably now, if it's sort of now, never really, because I think that if it's going to be an inflation hedge, it's got to come in now. I'm not quite sure whether inflation is going to come in the way that we think it is. I think it's still going to be rather, you know, you have some things where there's massive inflation and it's also variable. So one week petrol's really expensive and then it's back to normal. Then the next week it's potatoes, and then it's whatever else the HGV drivers are not delivering. So I think there's a bit of that as well. I don't think it's quite the general inflation that we had before. I think it'll be patchy, and therefore it'll be a bit more complex in terms of doing that. But I think the governments are bluffing when they say we're going to raise interest rates. I think that's a complete bluff, because they'll just be shooting themselves in the foot. They'll be destroying the stock market as well. And they need those assets to go up so that they can keep getting stamp duty. They can keep getting stamp duty on property and on the stock market, which is very important to them.
I think something that's important to realize about interest rates is that, you know, we don't necessarily get low interest rates, do we? We buy stuff on our credit cards, we're still paying 17% or 8% or 9%. And if governments raise interest rates, and they actually increase money supply, you know, if people can still get the money. Oh dear, I'm paying 3% interest rates, say corporations. It's hardly going to bust their neck, is it? If they could go up from 2% to 3% or even 4%. And most of us would absolutely love to get 5% on our credit cards. So interest rates, real interest rates, and real interest rates is a different matter. I mean, if you have 5% interest rates and you've got 8% inflation, that's a negative interest rate of 3%. So there's all sorts of way of calculating that, all sorts of way of managing that. And I think the central banks certainly got the way that money supply works by the scruff of the neck.
And that's the other, you reminded me of another point, actually, because obviously in the good old days, maybe 10, 15 years ago, if you had 100 grand or 200 grand, you could, or $500,000 or whatever it is, you're a pensioner, just put your money in the bank, you get 5% or 6% interest. And a lot of that money, which was on deposit, which was producing liquidity for people, that's all gone. And that was one of the reasons we didn't get inflation, because you know, they just said, well, you're borrowing money at 2 or 3%, but there's no interest on any deposit. In fact, it's almost negative interest rate. You know, I get a negative interest rate on my company account. You know, Lloyd's keeps charging service charges for providing no service, And so a lot of money came out of the system when the idea of having money on deposit was killed, I think, after the GFC. So we've had 13 years of no, you know, pensioners and other people like that getting nothing from their bank deposits. And I'm not sure. Yeah, go on.
Well, many years ago, I realized that debt is wealth, which is why rich people borrow money.
Yeah.
You know, if you can borrow money and you've got 5% inflation, and you're borrowing it at 3%, you're getting the money at a 2% discount. I mean, you know, debt is wealth. Now, debt at 17% is you know, poverty, but debt at 3% is wealth. I mean, if I can borrow 100 million at 3%, I could spend 50 million and pay back my interest rate payments for 20 years. By the time I'm dead, nobody would know that I'd actually just, you know, spent it on wild living, which is what the Japanese have been doing for quite some time. So there's a balance between thinking of debt as a bad thing and as a good thing. And, you know, the proof of the pudding is a lot of rich people borrow money. Exactly. And they're simply rich. They borrow money. And it depends on how you borrow and the environment that you're borrowing under. And, you know, yes, people who are not rich, who were living off their income, are in a bad position. But if you look at the way that the bad part of what central banks have been doing is it makes the rich richer and the poor poorer. And that's what happens when you have the way that QE works, is it pumps money into the well-off. And it makes the people who haven't got money less well off. And you'll get this divide between the rich and the poor. But it's the only thing you can do if you're going to use if you're going to tax everybody crazily and you're going to run huge budget deficits. You have to monetize, you have to QE. The downside of it is this difficulty that you get with the poor getting poorer and the rich getting richer. But anyway, this is the world that we find ourselves in, and we are in for long-term inflation at a pretty high rate. And how that is going to pan out, I think there's these lags in the market because the market is no longer very perfect. In fact, the market is very imperfect, and therefore you have to, you know, wait for things to happen really quite a long time. I mean, sell in May, go away, come back at Ledger Day. That's the middle of September. Only now, in the middle of October, is it starting to kick off. So there's been a month extra lag. The summer lull has been an extra month. Well, that's relatively sobering if you think that the whole sort of rate metabolism of the whole economic environment has slowed down to such an extent that you tack another month onto the summer lull. I mean, and I think that's where we are. We're in, that's the stag part of the inflation.
Clem, I'm going to ask you like a crazy question, but I think somebody actually did it, right? Would you borrow money to buy Bitcoin right now?
No, I certainly borrow money to buy property. After all, how many people in the UK consider themselves well off? All their money has come from borrowing money to invest in property. So there's an example of a carry trade where you borrow money at low interest rate and inflation of assets, or just inflation, delivers you a profit. So actually, most people are totally familiar with borrowing money to actually make money. But when it comes to outside of property, which everybody is totally fascinated and fixated by, they don't see that that's a principle of investing or making money. It's called a carry trade. You borrow money at X and you deposit it at Y. And you can do that all day long in crypto, because you can borrow money at X, put it into a stable coin and put it down and earn 8%. So you can borrow it at 4 and deposit it at 8. Well, that's a 4% return. It's a 4% carry trade. Now, it covers all sorts of risks that it's best to understand, like the risk of the place where you deposit it going bust, or getting hacked, etc., 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 or getting regulated off the face of the earth by some regulator or other. Yeah. But there's an example of a way that you could make, 4% on a large amount of money, and that is financial engineering, and the world is full of that.
I'm going to pull out a chart, and then maybe you and Zach can talk over, because I know, Clem, you were intrigued by Coinbase listing at the time. So here is the chart of Coinbase, right? We've seen obviously the big spike at the beginning, and then it went down, and now we are in the middle.
Don't yearly, Steffi. Where it says daily, just put yearly. Not date range. No, oh, probably not that one. See where it says date range. Go to where it says date range. Left a bit. There we go. Go down to 6 months or a year. Yeah, and then put daily on there. Yeah, daily. Yeah, there you go. So put a year on that, not 6 months. And then we'll see the whole thing. Yeah, right. So there you are. You've got the whole chart there.
Okay.
Yeah. That's pretty good. That gives you the idea. So it came out, it popped, and then it slumped. You see, I think Coinbase have got problems. I've had problems with them, and their customer service is absolutely atrocious, and that puts a pale over the whole organization if they can't get the customer services. I keep doing things like, can you change my address, please? And they say, oh, thank you very much. Oh, by the way, we consider this issue solved. We haven't changed your address. Goodbye. You say, but you haven't changed my address. Oh, you can't respond to this email. You have to resend it. So I resend it. I've done that about 5 times, and then I can't change my address. What sort of organization can't change your address and be considered a safe financial institution?
Well,
they don't care, do they?
They are launching an NFT marketplace now, so they are busy, pulling in product to kind of expand within the services they can do, and then they are not keeping care of what they have got. It just doesn't sound right.
Yeah, but they are effectively a new bank, or whatever you want to call them, a new broker. Well, those guys have high levels of customer service, and Coinbase doesn't, in my experience. And I've tried, for months now. No. So what they then do is they then just shut your account down because you're actually asking them to do some customer service. And, that's very, 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 very poor. And I think they're a poor organization. And I think the market's punishing them because, people would use them as the first place to start in crypto because that's what they were and that's what they still are to many. You go there and you get shoddy treatment. You're going to go, well, I'm not buying that stock, am I? In the same way as everybody bought Amazon because they use Amazon, they love Amazon. Everybody, loves Apple stock because they've got Apple equipment and they love Apple. And it's always been a great supporter of stock prices when it comes to companies listed in America because they've got great customer services. Well, if you've got terrible customer services, shamefully bad as Coinbase has, then you've got to say that, that's a company that's going to get punished for it. And I think that's what you're seeing.
Zach?
Sounds like there's an opportunity for a new player to come in, or you go with a smaller company. But once the company's raised money, really, it doesn't really care, does it? That's the thing. Why should it care?
Let me.
Well, if it becomes the baddie, the regulators land on you because they know they're going to get support. If you're a Tesla and everybody loves Mr. Musk, and his car explodes on the freeway, everyone goes, oh, look the other way. So, if you don't get your PR right, you're going to get punished in America if you're in a regulated business. Or, you're going to have the politicians jumping up, down all over you to grandstand and say what a marvelous group of people they are looking after, the general public. You set yourself up as a baddie like Microsoft did back in the day, you're going to get, hung up.
Zach, I put on Argo blockchain, which you mentioned before. You might have got some,
they've had their issues as well. 1 or 2 near misses in terms of sort of funny news or dodgy news. But I think near to £1 probably after the pullback we've had. And if you believe in crypto, I think it's it makes sense to me that if you're going to buy anything in the crypto space, probably the most conservative thing would be a crypto miner. And I think Argo probably fits the bill there. It might not set the world on fire here, but they are actually doing their job. With China out of the game now, all the production of Bitcoin is in the US, or mining of Bitcoins in the US, and Argo's there to do it. So I think it makes sense in a hopefully not too volatile way. Although at the moment it just looks like you just buy Bitcoin itself. But I have to admit.
Well, I've got to admit, I bought Argo. I think it was either 3.5p or 4, something like that, and sold them at 11. And I bought quite a lot, and I sold them at 11. But they're very bright company.
That was
very bright.
That was in 2020, right?
Yeah, that's right. Yeah, they're right down there. Yeah, and then when the market was crashing, that was one of the ones that I sold everything because of you, Steffi, and you saved me a fortune. You saved me a yacht, but one of them was Argo, and actually, it went to the moon. But even so, and getting out at that moment, just after the top before COVID, saved me a yacht. Even with Argo going from the 11p I sold it at, I think that's roughly speaking where it was at COVID, to like £3. But I will tell you, I would have sold that at 20p anyway. Because I can't hold on to shares that do that.
Yeah, but well, that's kind of like when you see perhaps making, even when you double on a stock, I mean, the normal average person would just sell, right?
Well, not necessarily. There's quite a lot of people that will ride these to the moon and back down again. I mean, the classic percentage that you should sell at, going back to the 1950s, in research, is 30%. So you see 30%, you sell, and then you've got another 2,000 shares to look for to find the next 30%. Yeah. And you can do that, 2 or 3 times a year, and away you go. So that's quite a good plan. But when you get these rocket ships, I mean, I now can hold on to about 100 to 150% on a stock, and then I just break out into sheets of perspiration and have to sell. I can't do the 300 packers. I just can't do that. It's one of my weaknesses. But never mind, if you're bringing down a 20-30% a year on a big portfolio, you are laughing. So that's what I target, rather than 10 baggers.
Yeah,
very hard to do that.
What about MicroStrategy, right? Because obviously Bitcoin is leading now the crypto, I don't know how to say it, because it was a boom and now is a reboom, let's say. Are we going to see them breaking through again 1,000?
Well, back to a point that Zach was making about crypto and it being a hedge against inflation. I think that's insane, but he's right. People do think that, because there's this theory, it's called the fastest horse theory. So you go, well, what's the fastest horse in this race against inflation? And people go, well, Bitcoin, because that's certainly a fast horse, a mad horse, and it's liable to leave the course and dash off into the bushes if you're not careful. But there is an element of, well, I mean, why wait 3 years to see gold go up 100% when you might make 40% in the next 5 days on Bitcoin? So there is an element of that. And when you go to the Robinhood generation, they don't even, all they know is crypto and crazy stocks. So they are chasing, things that go vertical. And that's the speculator, that's the gambler market. And, I think the investors are pretty much on the back foot and risk off on a lot of fronts at the moment. So aren't really playing. So, you've got this energy and excitement in crypto that's informing the market in general. And a lot of the excitement and pop in equities has gone now. So in the US, SPACs dead as a doornail now, etc. Biotechs, are not what they used to be. So it's definitely a risk-on environment out there, and you can see that in the charts. There's definitely a plateau occurring that has been developing ever since I said, well, oh dear, it's gone bearish, the market's too high all the months ago. The chart says I'm not too far wrong. It has curved over and is now sort of sideways trading. But the Bitcoin phenomenon goes on. I still just don't see it passing 65,000. But it's probably going to do that just to make a fool of me.
Yeah.
But I'm playing in DeFi because that's where the big pops are. And if Bitcoin goes up, the DeFi stuff's going to go big. So you might as well play there rather than risk a big fall in Bitcoin. You can get much more alpha in the small stuff.
Okay.
That happened to us, Steffi, last night when Rariable listed on Coinbase.
Yeah, exactly. And I was just going to go into that. It's kind of like, Rariable was one of the few coins that we were expecting to go on Coinbase, and it was kind of holding off, and finally, you know, how much it went up? I think it was like over 50%, wasn't it, within the few days?
Yeah, I mean, it got down recently to as low as 13. I should have bought more then, but you know, I had my nice little stake of Rariable, and was just waiting for it to pop, because the history of Coinbase listings used to be, once upon a time, they list the occasional stock and new token, and that token would go mad, and then it would be listed, and it would go mad over 3 or 4 days after it was listed, because the people on Coinbase would then actually, oh look, there's a new one, oh, I'll have some of that. However, everybody got wise to that, and then the moment the news came out, it would explode. And then people were looking for the next one. So when they reckoned it was coming, it would explode beforehand. So you see, you know, there's a bump.
Yeah, 50%. So that
these are fantastic, because they're just like a chartist dream. I mean, that's the thing. It was like
I'm using Coinbase though, so I have to say that I do use Coinbase to check some of the crypto. You know, crypto.
As long as you're not talking to them, you're fine, aren't you?
Well, getting to them is the impossibility, not actually trying.
Clem, she'll ask some other DeFi space, you know, space to watch, and then I'm gonna hand over to Zach that can do more analysis on stock and shares.
Okay. Oh, I'm just gonna pop my lungs up now. But anyway, yes. So you know, Rariable actually got listed, or the world was told it was going to be listed yesterday, and up it went. And now you have to guess what's going to come, hold it, and the moment they announce it, you've got to sell it immediately. So that is now the game, as it's developed from, you know, get it as soon as they announce it and then let it run for 3 days. It's now get it before they announce it and sell it when they announce it. So that's what Steffi and I did last night, to much happiness. And that's the sort of play today that is where the fun and excitement is. And I think if you're playing in Ethereum and you're playing in Bitcoin, you're talking about big downside, not much upside, certainly not, you know, like a 50% because of announcement on Coinbase of Rariable. So
do you have
play smaller?
Do you
get the big sense.
Do you have any other coin that perhaps could be candidate for this?
Yes, I do, but I'm acquiring it. So, okay, so I don't really want to tell the world to jump ahead.
Exactly, we can speak about them next week. Okay,
yeah,
so
but you as a trader, you just have to think, what is the next most likely coin to go onto Coinbase? And our opinion was Rariable was NFT. NFT was hot. It's the only NFT site of any size that has a token. So Coinbase has to list Rariable at some point because it's the only place to go. It's the only seasoned NFT platform with a token. And Bob's your uncle, they did. So you've got to, you know, speculate like that if you're going to play that game. It's all about working out a good idea and then staking it a bit.
Okay, listen, Zach, I'm going to allow you to share, so then you can perhaps, you know, help us, walk us through some other, you know, stocks. Maybe we can talk about value stock, or maybe, you know, we are still here.
I'll talk about today's rises because that's what I normally look at. So it's the easiest thing to do. And I think today was quite an interesting day in the sense that what I like doing, which is probably what everybody likes doing, is just 8 o'clock market opens, you start seeing which stocks head to the top of the leaderboard. And the GS Technology, and actually what's good today is that you've got quite a few stocks where there's sort of follow through on fundamental news. And so, for instance, GS Technologies earlier in the week, they announced a new CEO. So that was like, you know, if you bought off the back of that, somebody called Jack Bai, I've never heard of him, but people seem to like him. It's almost as popular as Jack Ma, I think. And so the shares there up 39%. And you could have bought them yesterday or the day before, so there was plenty of time, plenty of chance to get in.
Zach, can I show you something you like?
Yeah, go on.
On the site, if you go to top lists.
Yeah. Yeah, I forgot about that one actually. Yeah, you're right.
And if you go to top lists,
the breakouts, and
then if you scroll down and scroll down a bit, scroll down a bit more, and you see market cap greater than 1 billion. Oop, you've gone too far.
Yeah,
right. Market cap greater than 1 billion. Click on that, and this will give you the top list for all companies over 1 billion. So all your blue chips. It's the same idea, but with all the killers out of the way.
All right. Well, okay. Well, that's. I think the one that I was actually quite fascinated by is the Hut Group. I don't know if you've been following that story.
Yes.
Where basically it came to market. I'm not quite sure. It was like e-commerce, but God knows whether they actually said anything. But they came to market with a massive valuation, billions, and it was sort of the top of the market for that kind of thing. And if I was the CEO of the Hut Group, I would have just kept my mouth shut. But they did a presentation this week to the city, and people just thought, like he was sort of saying, what do you think of us? And they just thought rubbish. So the share price is completely collapsed, and then it gets into the press as well. But you have that sort of envy in the media when somebody does very well in this country. It's quite a sort of unusual phenomenon. And basically,
envy in the UK of success? No.
Yeah, no. For some reason, people just don't like other people being successful. I'm not quite sure why that would be. It's just a terrible habit that they have. It's like scratching a Rolls Royce. That kind of with the keys. Which I do every day, obviously.
But that's your own Rolls Royce. Sam.
Yes, exactly. I do that so that other people can't do it. You see, I'm trying to be one step ahead of the crowd. And so basically the Hut Group here, so this is one of those situations where you're sort of thinking, is this a dip to buy into, or is it just totally over? Is it going to be the new Polypec? If anybody remembers that.
Zach, what they've done is they've done some deal with SoftBank at a huge valuation, and that's really going to rub up the City of London the wrong way, because these blooming Japanese come along and tell the world that the internet is worth way more than they think it's worth, because after all, the internet does this crazy new thing as far as they're concerned. Spot the internet companies in the London market, and SoftBank's come along and said, hey, your crazy idea is worth 6 billion, and they're laughing and going, oh, that's rubbish, that is. And they're going to spin out the revenue generating into a sub, which are going to float separately, and they're going to run this technological company that SoftBank is investing in and valuing at 6 billion. Well, that's going to rub the city out the wrong way. They didn't go to Oxford to study philosophy to take that kind of abuse.
You're right, actually. So this one, I suppose on the technical basis, it looks as though we had the RSI low there when it was £4 earlier in the month. Obviously, those were happy days. The RSI went to 20. Now it's much lower, so it's near 250 or 280. The RSI is almost the same actually on this dip, which accounts as bullish divergence. So I suppose it means that if you can ignore the sort of the wrath of the media and all the people saying I told you so and it was overvalued and all that sort of stuff, can actually be a buy here. So that is probably the punchy call of not only the week, probably the year actually.
I would let that up season, because that's not going to do a V-shaped recovery. As we know, V-shaped recoveries, apart from when you say they can't happen, never happen. And it's going to base, and I would, that could easily go down to a buck, right? That could easily go down to 100. Because, really? I mean, you've got the first fall, the kind of noisy fall, and now you've got that direct fall. You could easily have another one of them. Easy. And I would let it settle and let it go along the bottom and see what's what there, and wait for it to actually start to trend up. Because I don't think it's going to go vertical up. I mean, all the institutions have said there was a short note came out from some shorters that said, "Oh, this company's rubbish." It is, and the city in that capital markets day, they went, "So what about this shorter note that says you're rubbish? Come on, disprove it." And I don't think they responded in a way that was acceptable to the city. So
yeah, no, it's sort of it sort of does remind me a little bit of Aston Martin, that IPO, which was a complete. I mean, that really was it was literally a car crash, and I think it's going to be interesting to see how. I think Gymshark is coming to market as well, where the guy's got this 29 and he's worth 700 million or something like that. I mean, what could possibly go wrong with that one? So I think that one is a short on day one. I think.
I think if you look at the glory stocks, they're faceless. Rightmove, faceless.
Yes, you're right.
Yeah.
That's exactly right.
DARKTRACE, which is, you know, one of my favorite glory stocks, and I think you can see that easily double from here. You know, its IPO nearly blew up because it had a face, i.e. Mike Lynch. But, you know, when you look at the companies that tend to do really, really well, they tend to be faceless. I mean, Feverview, I mean, there was no Branson-esque person there. So, I mean, and I think that these glory stocks, I mean, they annoy me because they should really, their valuations are ridiculous. And then you look down the other end of the market at ridiculously low valuations of fabulous companies. But there you have it. And DARKTRACE is a glory stock, and it's going to go carry on going and going and going until it has an obscenely ridiculous valuation.
Just keep their mouth shut, basically.
Yeah, but they tend to be faceless. But you know, I do think the UK does have stock promotions, and stock promotions don't tend to have a face; they tend to be faceless. And you know, I think DARKTRACE, I promised myself that when I saw any of these glory stocks, I was just going to buy them and leave them for 2 or 3 years, because that's how long they run for, and then just sell them when you know, after 2 or 3 years, and just forget anything but the fact it's a glory stock, and look for that moment when suddenly it goes ex-glory, and try to get out either a little bit beforehand or a little bit after. I mean, ASOS was a glory stock, and you can see how that went for it. And you're gonna have to go back quite a long way now, but if you go back, say 5 years.
Yeah, it's a long way. Yeah, no,
but you know, it's the run up of the glory stock is where the money is, and the getting out. If you scroll up a little bit, Zach, so you can get to the bottom of that chart. Other way, the other up. Let's stop there, and you see where it says 2017. If you click on that and drag it to the right, you'll get back. Yeah, you go. Keep going. Keep going. Keep going. Keep going. Let's get back to the glory days. Yeah, there we are. So you see that first run, that's when it was glory stock. Yeah. And, you know, getting that glory run from 2007 to 2012, well, there's a lot of money to be made there, to say the least. So, you know, if you want to see, if you just put your pointer over somewhere on the chart when it's low down, say 2007, you'll see the price is up the top there. If you scroll the chart down to the triple, you should see the price. There you go.
145, 80, 89. Yeah.
Yeah. So if you've got it at, say, about £1 when it started to run, or even at £2, it's running to, you know, £70.
Yeah, I think OCADO was a bit like that as well, wasn't
it? Yeah. These are the glory stocks.
So on ASOS, you think that we have reached like the resistance level, or the?
No, well, it's post glory stock now. The glory of it is gone. If you just center that a little bit more, so we can actually see what date that starts. There we are, 2017. So it's £3, and it's a 10 bagger over a period of.
Well, no, actually, it was much lower than that. It was near, like, you know, 50. I think Stuart Rose came in. It was like 60p or 70p. It was like really low.
Well, so, I would. Yeah, you could see. I would have been out at the top at £5 on that one, and I would not have held it that long. But when off it goes again, if it's doing the glory stock thing, then you know that is, you just buy some and get it for 2 or 3 years, and then come back and sell it, because they are, I feel, stock promotions. Now, interestingly enough, if you look at Marks and Spencers, Marks and Spencers own a large proportion of Ocado's sales, because they got the joint venture together, they made an investment. And I think I find it hard to get my head around the value of Marks and Spencers when they own a large chunk of Ocado's sales. But obviously the sales that OCADO do are lowly valued, as opposed to the technology platform that they have, which may be not generating the sales. But in my old-fashioned brain, I don't see how that all fits together. But Marks and Spencers, you know, are a large proportion of OCADO's business.
Yeah, but that move in August, the unfilled gap, was a massive signal. I mean, that should just keep going. I mean, that should be something which just keeps Marks and Spencers going for months now. You know, you don't. it's an island reversal below the 200-day moving average, and that's a massive signal.
If an investor wants to research how much of Ocado they own and what portion of that is important in Ocado's valuation, I keep coming up with what they own in Ocado being worth more than Marks&Spencer together. So go figure on that one.
Well, maybe somebody is now. What would you say that are possible new glory stocks, or are there any around at the moment?
Well, DARKTRACE is the only one I've got. That's the only one I'm looking at, because I mean, I do feel that we are in a bear market, and I don't know what's going to get us out of that. But we'll see. If you look at the FTSE, it's definitely at the top of its channel today, and that means that if it breaks up out of that, well, that's going to be very, very bullish, very, 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 very bullish. But if it reverts back to the bottom of the channel again, it would reinforce my feeling that that is the way it's going to go for some time. And I don't think there's much bad news priced in, to be honest. So we will see. We will see.
Clem, if the Fed is not raising interest rate, why we should see the market going down?
Well, it's money flow. As Zach was talking about, crypto, his idea that money's being drained out of equities into crypto, I think has some truth, for example. But the vast equity values out there, I mean, I've lost track of what it is in the US, but it's 25-30 trillion worth of equities in the US. And, money flows in, prices go up, money flows out, prices go down. So the fact that QE that's coming out of America, that goes straight into equities. And if you look at the Fed balance sheet, it's got a 4-week cycle of them putting money in, taking a little bit out, putting money in, taking a little bit of money out. And they have to carry on doing that to cover the American debt deficit, because no one's going to put money into US bonds at the moment. So what they're actually doing is that they are monetizing the US federal deficit with the QE, and that's what's going on. So you see that beautiful channel there. It's not that beautiful if you want the price to go up, but nonetheless, it's a pretty strong channel there. And it's been going on since I went, oh, panic, run away, it's the end of the world. But actually, as I think I wrote somewhere, I think the central banks, particularly Americans, are going to try to hold the market at a level for maybe even several years, like they did after 2000. If you look at the dot-com crash, the Fed held the Dow for 4 or 5 years in a horizontal channel. It was only broken down through by 9/11 and a few kind of shocks. But after those shocks passed, the market was levitated back to that sideways channel. And I think that's what you're going to be seeing with the market in America and maybe in the UK. But right now, if you were a bull, you'd be saying, oh, we're going to break out. And if it did, well, that would be very bullish.
I think, I mean, it doesn't have to be anything spectacular, but I mean, it looks to me, you've got the rising 200-day moving average. It bounced off that last month or whenever it was, and we on the latest dip, we didn't even go below it. So it is looking, I mean, sideways to up, not sideways to down at the moment. So you buy under 7,000, you sell at 7,200. It's not a horrible market. It's just a range-bound market, I think, at worst. I don't think it's worse than that. Obviously we both have our agenda. I think it's going up and you think it's going down, but at the moment it's it's the last few months it's done nothing basically on the FTSE, and with oil and gas going up, that really helps the FTSE obviously as well. So you might have the world going to hell, but you've got BP and Shell going up, and that's it.
Well, I mean, I think the FTSE 100's performance in the last 20 years is absolutely lamentable. And the contrarian in me says, well, of course at some point it's got to explode and catch up with the American and German markets, which would mean they would have to double very quickly. But actually, I think that there's a hole in the bottom of the bucket of the UK stock market, and value just pours out through it, and therefore it's not going to catch up. But I'd like to imagine it did, because I'm basically a UK market specialist, and I don't really feel too confident in the US market. I think it's always a very dangerous game. I think
you got the thing with the FTSE. It's killed by the new crypto people, and it's killed by anybody with any spare money putting everything into the housing market. So until that changes, it's not going to go anywhere fast, is it? I mean, that's the other thing. And it's just reflecting that.
You've got a that's a point of view, and you could very well be right. But if you put the CAC 20 over the top of that, you will see that it's the same chart. And if you put on the DAX and the US markets, you'll see that the DAX and the US markets is the same chart. So we're the French market, and the French aren't big into property. So there's a divergence there, but not in the chart. So I do appreciate that point of view. And I think there's a great deal of truth that the private investor is not fanatical on stocks because he's fanatical on real estate for sure. And that has an impact. But, you know, the institutions are there in force, and all our pensions go into a fairly large amount of equities. But for some reason, which is hard to ascertain, we are as lamentable as the French stock market and not as glorious as the American and German stock market. And
very insulting, really, isn't it?
In the road on that one. I mean, how about putting them on, or did we do that last week? If you put them on overlays.
Yeah, that might be pushing my skills actually.
Click on overlay. Yeah, type PCAC.
P.
CAC should do it.
Oh, sorry.
PCAC.
Right.
Oh, that might even do it actually. Did that do it? No. Oh, maybe just CAC then.
Yeah, I think CAC could be the one. There it is.
There we go. PX1, yeah. And then while he's thinking about it, type in DAX.
Oh dear.
And then below it, type in, I don't know, SP 500.
Yeah, I think we saw that.
Yeah, we've seen it before, but it's actually it's worth seeing again because it's so painful.
Yeah.
I think it's just you know, it's yeah, I got it.
Yeah.
Now, if you now stretch that back, if you center that on the screen, Zach, a little bit, and then you too much, back down again.
All right.
No, stop. Oh, there you go. And now if you drag it back and back and back and back and back.
Clem, question: do you think the Brexit, all the Brexit situation is kind of a stop for the UK market to go higher?
Well, at the moment, it's just drag that back to like 2000, Zach, if you can. The Brexit is turning into such a disruptor, with all the supply chain issues. It's like supply chain problems upon supply chain problems that it can't really help anything, I don't think.
I've got to hit the road now, folks, but hopefully we can reconvene at the same time next week for more charting and other action.
Yeah,
that's okay.
So anyway, you can see there. There you go. That's probably about perfect there. So red and black, UK, France, green and blue, American and DAX. So I think that the British government and its regulators need to bear that in mind and explain that away.
Exactly.
Or better still, sort that out. Because at the end of the day, your country's wealth is often based on its equity base. And whether that's real estate or the businesses, more the businesses, right? Because real estate is not necessarily good for GDP growth. And there's clearly a problem of systemic proportions that mean that the shares on the UK London stock market would appear to be massively undervalued. I mean, you could say, oh, those Americans, Germans, they're so overvalued. There they are strutting around being hyper rich, and there's us being sensible and being poor. But it doesn't cut it with me.
Exactly. Okay, something to remind, I think, the UK government and everybody the situation here. Okay, on that note, Clem, thank you so much for joining. Zach already left us, so I will see you again next week.
See you again next week, Steph.
Thank you very much for everyone.